Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, good morning.
Good morning.
Starting another day. And, it's almost as if it's one of those sessions where the previous night's action does not matter because what happens in the next 48 hours could be pivotal, right?
Yeah.
Yes.
All of it could change. Let me just quickly tell you what is the change we're talking about. So today, we get the U.S. consumer price inflation numbers out of the U.S. And then tomorrow, this is, of course, U.S. time. So FOMC, we will react to on Thursday morning. So CPI today, and based on that, I think market expectations of, maybe the quantum of rate increase, but definitely the commentary from Fed chair will change. So I think this is extremely important. Markets overnight rallied, and I think that may provide a little bit of support. S&P was up 1.5%. NASDAQ was up about 1.2%. There was, I think the New York Fed inflation survey which came through, and across time frames, this is conducted in November, across time frames, 1 year, 3 year, 5 year, inflation expectations have fallen. And I think that is the data came through mid-afternoon or so in the US session, and markets spiked after that. But, these are inflation expectation surveys, and we get the big CPI number today. And that's why I said, this is, of course, good, but you need more. Just a quick word on the CPI itself. I think the market is positioned to say that, numbers are going to be soft. Inflation has peaked out. Inflation will come off. And I think if the CPI number comes in line with expectations, I think that narrative will get stronger. If it is a big miss, I think, you will see some very lively price action. But if it's a overshoot, like, for example, what the producer price index on Friday showed, I think then you will get some fireworks as well. But the market is going in believing that we will get a softer print. I think that is the basic assumption. You got the US Treasuries, which were up a little bit, 2 basis points in the 10-year. The dollar was stronger. Oil spiked up a little bit as well. Brent is now closer to 78. We'll talk more about oil in a bit with Manisha. Nifty yesterday closed just under the 20-day moving average. That is at 18,504 after yesterday's close, and we were just under it. Friday's high, if you get a bit of a bounce, Friday's high of 18,665 becomes the first level to take out. That is about 100 points away from where we are right now. That's the Nifty. But for the banks, that's the stronger part of the market. Actually, the bank Nifty has had 10 straight positive weekly closes. If we close higher week on week, it's going to be the 11th. it has got to count for some sort of a record. But it's also true that intermarket divergences between what the Nifty is doing and the Bank Nifty, that is, it doesn't, it's increasing, but it cannot last beyond a point. So something's got to give. Either the market breaks away, runs higher into the close of the year, or the banks maybe take a bit of a pause. But for now, banks are the stronger part of the market. 43,440 is the initial level on the Bank Nifty if you get any signs of reversals, any signs of weakness, etc. So far, we haven't seen any. Even yesterday, we did not get a negative close. We got a positive, mildly positive higher start. Sonia, hi. Nigel, hi.
Hi, morning. And it's also just about 10 days left for Christmas Eve, right? So come on, there's so much cheer building up. I don't know about you, but if you go out there on the streets, people are putting up their Christmas trees. There are lights across the board.
Before walking in, I was just asking Nigel, where do you get the best plum cake in Bombay? It's one of my favorites. And,
is it? I'll arrange it.
I'll
with a little bit of rum.
And
not little bit. You can be generous.
And I'm sure our viewers don't know this, but Nigel every year very graciously treats us to lovely Christmas treats. So I'm waiting for that specifically.
Marzipan will be here soon.
Okay, that's my favorite. But for the market, right, there is this positive cheer that has spread, and you can see it both in the local as well as in the global cues. So the SGX Nifty, as we said, is up almost 30 odd points. For the local cues, the retail inflation came as a big surprise yesterday. It's hit that 11-month low of 5.88%. It's important because it's finally below the RBI's target after 10 whole months. So the RBI had a 6% target and now it's below that. What this does is provide some comfort to the RBI's policy setting and interest rate framework. So maybe it won't need to be as aggressive in terms of rate hike. So that's a positive, definitely. The other thing, of course, is that the global markets recouped their losses. The Dow was up about 500 points. And what I also liked is that the FII selling has reduced substantially. So from an average of around 1,000 odd crores or so in the last many trading sessions, the FII selling is barely 130 crores. So that's another, green tick for our own markets. Month to date, the FIIs have still sold a large chunk, but thankfully yesterday the selling has come off, so it's good for the bulls. DI buying continues to come in thick and fast. Now, for our own markets, the range has been about 18,400 to 18,800. We are at the lower end of that range. Purely for today, the markets will definitely open in the green. But let's see, we'll take it from there. There are a lot of things that you need to watch out for. So there's the Paytm buyback board meet that takes place today. That's important. Colgate will be in focus. There's the first analyst meet with the new CEO, Prabha Narasimhan, that takes place today, and she's come from HUL. So, that would be important as well. And there's Landmark Cars, which is the premium auto dealer. Their IPO opens today. So we have plenty to track. But Nigel, what are you looking at?
Well, yesterday was an easier day actually for the bulls than today, because yesterday you got a bit of a dip. Today, unfortunately or fortunately, the SGX 50 is suggesting a bit of a gap up. Yesterday, there was a very good session actually for the bulls, and the previous plate should come up for you because the Nifty was more or less flattish and we recovered from the day's low. But the bigger positive is the breadth of the market was good. Both the small cap and the mid cap indices, they did pretty well in yesterday's session. On the Nifty itself, there appears there was some short covering that took place because the Nifty from the lows did recover and the open interest went lower. On the Nifty Bank, well, there was some long addition that we saw. Moving to the FNOQs and what the FIs did, well, they covered close to around 6,000 short contracts. They continue to remain net long with their positioning at close to around 60%. But for me, the positive is they wrote puts. And they wrote puts aggressively yesterday. Close to around 80,000 contracts were written in trade. And what were they writing? Well, the short covering was only on the Nifty futures. But they also wrote the Nifty Bank puts, which is pretty good news. So the Nifty Bank at 18,400 as well as the 18,300 put, both of them were very active. And, on the Nifty Bank, the 43,700 as well as the 43,500 put were very active. So between them, they added close to 20 lakh shares. That's giving you a sense that support is at around that 43,400 odd mark, just going by the options data. On the Nifty, 18,400, as I said, that saw a good amount of open interest build up. And even when the markets were virtually at the day's low, you didn't make any money if you bought that strike. That told you that there was writing out there. The 18,300 put, there was a mix of action out there. There was some buying, there was a fair bit of writing as well out there. However, on the upside, 18,500 call saw some writing. The premium's around 100 rupees. So you add 18,500 plus around 100 points odd. 18,600 becomes a resistance. Yesterday's low becomes a bit of a support zone. Don't chase the opening is, probably the better way to play it. Wait for the intraday dip, as has been the case for the last many days. And then, in fact, look to get in, maybe at around, 50-point downtick or so. 35 points for starters as of now.
Okay, and the market could perhaps be in wait and watch mode. There's the US CPI data that comes out later today. There's the Fed meeting. Fed is expected to raise rates by 50 basis points, so lots of action to track. In the meantime, let's get you some market opinion as we kickstart trade this morning. First up on the equity front, we have Katie Huberty of Morgan Stanley, who says that their US equity strategists have long argued that they face high risks of an earnings recession. She says their year-end 2023 S&P 500 price target of 3,900 is not far from current levels, but they do not expect it to be a smooth ride. She also says they remain highly convinced that 2023 bottom-up consensus earnings forecasts are materially too high, but mainly attributable to overly optimistic expectations for margin growth. Katie says Morgan Stanley's US equity strategists believe that the market will discount downside to 2023 earnings sometime in Q1 of 2023 via a 3,000 to 3,500 trough for the S&P 500.
Okay, some money market views now. Bhaskar Panda of HDFC Bank says downward pressure on the dollar is sustained since inflation figures came in lower than expected a month ago. He says this week's US inflation data could affirm the buyers. Bhaskar says the dollar INR pair has rallied on demand pressure but is hovering below the 83 to a dollar mark, and this may not be breached if oil prices also remain lower. He expects the dollar INR pair to trade in a range of between 82.45 to 82.65 to a dollar for the day.
And on the bonds, Bhaskar Panda says that Indian CPI inflation print was encouraging as it came in lower than expectations, but IIP disappointed, and he has a range in the 10-year benchmark bond yield at about 7.2 to 7.3%.
Well, we've got plenty of stock-specific action, and we'll get to that in just a bit. We have Kotak Mahindra Bank, Land Pharma, Godrej Agrovet, Tata Motors, GR Infra Projects. Well, they are all stocks on the back of positive news flow. Add to the list KEC International, Route Mobile, ONGC, and Oil India. Just one stock could react to negative news flow. That's Ethos.